G'day, Internet. Max Wright here, and a really fun and pleasurable interview here today. We have Max Keiser joining us. Max, thank you so much for being here.
Yeah, Max, great to be with you. And yeah, what's up? What's up?
You're about to kick off or in the middle of the Fuck Elon tour, and it just so happens that Elon grabbed some headlines today again in the world of Bitcoin. He was speaking at something online where I think a lot of people watched it. I was wondering if you had a chance to watch it and your thoughts.
Right. Well, I did. And he made some statements that are remarkably tone deaf and like saying that, well, nobody wants to run a full node. Nobody wants to run a node, referring to Bitcoin and things like that, where he's clearly hasn't done his homework. He hasn't done any research. And he's a guy who should be mocked because we have a lot of really excellent people in Bitcoin. And they're doing a lot of hard work. And we don't need some bumbling jackass like Elon Musk, muddying the waters.
Right, right. And it seemed to be there's a little bit of a bump in the Bitcoin price during that live stream, despite the fact that I don't think there was anything particularly bullish that any of the participants said. Of course, there was Kathy Wood, Jack Dorsey from Twitter, and Elon Musk, but I didn't think there was anything especially positive being said, nothing negative being said either. And maybe it was the absence of negativity that caused the price, or maybe it was something else entirely. Any ideas on what gave the Bitcoin price a bit of a pump today?
Oh well, it's oversold, so it's going to be have a kind of an upward bias at this point, and 1 or 2% or 6% move on any given day. I don't think you can read too much into it. Overall, the past 10 years, the volatility has come down in Bitcoin. When I started 10 years ago, we'd have 50% moves in a day. Things were a lot different back then. We're heading, into a lot less volatile era. But as newcomers come in, they look at a 6% move, and that seems big to them, but that's not really outside of the average move for Bitcoin. And so I just see it bumping around here in the low 30s, which is I think it's a 365 day support, or some moving average is pretty strong in here. We're oversold. We're due for a bounce. Still looking for new all-time highs in 2021, and I still think we can hit really extraordinary highs of 220,000 in 2021. We've seen these types of moves before.
Yeah, we absolutely have. I'd like to leave Bitcoin for a second, although I'll definitely come back to it. But let's talk about the macro, if we can, for a little bit. Like we see more hysteria over COVID. We see Europe locking down harder. We see Australia locking down harder. America seemed to have kept its sense for at least for the time being at the moment. But we see that the stock market all-time high. We see there's all kinds of warning signs going on, in my opinion, anyway, with the broader economy. Where on the short term, I think we probably have similar opinions long term on the broader economy. But what are you seeing in the sort of 6 to 12 month range in the broader economy?
Well, over the past 40 years, we've had a situation develop where all political, fiscal policies and monetary issues are answered with money printing. And this is done globally, and all the banks, central banks collude. This goes back to 1971. So August 15th will be the 50th anniversary of the Nixon era, the Nixon shock, when they closed the gold window and we went on a pure fiat money standard, which was an experiment really in world history. We've never had that before. And over these 40 years, it's we've bred a couple of things that are very negative. One is the response by central banks to meet every single crisis with more money printing. So they're not being proactive in any way. They simply, when there is a crash of some type, they print more. And the second thing is that all these banks are now colluding. And this was documented in a book by Nomi Prinz called Collusion. And it just shows how all these central banks, they used to be answerable to their own individual sovereigns, but now they all work together and answer to themselves. And so this has led to a global insurrection against banker occupation, as I call it, or it's kind of a global, almost a global civil war between the central bankers and everybody else.
Yeah, completely agreed. So I think your thesis is similar to mine, but I mean, long term, like all fiat currencies, the dollar, the world reserve currency, going to zero. But how long term is long term? Do you, in your mind, do you have kind of Is it a 5-year, 10-year, 20-year, 30-year? How long do you think the dollar is going to last?
Right. Well, you have right now dollar strength because you have a lot of weakness in just about every other currency. And dollar is still world reserve currency, and it's still the go-to currency for folks looking for a safe haven. And but I think on the geopolitical front, if you look at how the global economy works right now, since China was let into the global economy under the Clinton years when they entered the World Trade Organizations, we've had China go from a developing nation to now a competing superpower. Some argue that it's already taken the place of the US in terms of being the leading global economy. And they are starting to make advances toward territories like Taiwan, right? Taiwan has 80% of the world's chip manufacturing capability. It's the jewel in the crown, if you will, for that region. They were successful in co-opting Hong Kong. So I think they're going to make a move on Taiwan. And I think the response will be, there won't be a response. I don't think the U.S. is in any place to push back or anybody else. And then people are going to, wake up one day and say, you know what, the dollar is a piece of shit. And they're going to dump it.
Yeah, and time frame, like what are you thinking? How long will the dollar last?
Well, I think it's you'd rather be 6 months or a year early than one day too late, right? Because once the thing blows up, you're not going to be able to make the moves that you were hoping to make if it blew up. So, but I think it is imminent because of the fragility of the system. So over the past several decades, all the money printing has led to extraordinary malinvestment and extraordinary fragility in the systems. And the 2008 crisis was absolutely devastating. The entire global economy, there was a credit freeze. That was responded to with something like $18 trillion worth of money printing. But all they did was expand the credit lines of these banks that caused the problems. Then they went ahead and they did the exact same thing, but it's 10 to 15 times worse. It's much more fragile. And now I think we're on the precipice of another similar credit disaster. Europe looks absolutely fragile and disastrous, and a major bank in Europe, I think, will probably blow up in the near term. And then the spillover into the rest of the banking system would be catastrophic. And I think that's what we're looking at. And I think that this is also a precursor of a more geopolitical tension spilling out into actual boots on the ground, as countries start to take advantage of the chaos to expand their territories.
Yeah. I competing thoughts that I just have going back and forth in my mind. We obviously in 2008 the money printing was unprecedented, and at the time, now they've done it again, and it's certainly the mentality that I think we have, that they're showing, is that no matter what crisis they're met with, they are going to print. And that would suggest a hyperinflation, just rapidly more and more as disaster upon disaster shows up in our world. More printing, more printing. It's eventually going to lead to a very high inflation. That's one thought. The other thought is that, I mean, these guys are grotesquely incompetent. They are, massive bureaucracies. They turn on with the speed of the Titanic. And then the question becomes, is there going to be maybe a big deflationary event before this inflationary event? What's your take on that?
Yeah. So, you've been in this for a while as I have, and the definitions for inflation and deflation, you could get several different definitions from different people. Then there's stagflation. But I think there's actually something new that, in retrospect, we're going to have to come up with a name for it. Maybe biflation. Because what's happening is, along with all the money printing that's going on, the central banks are expanding their credit services, essentially. So the debt levels are simultaneously expanding almost on an infinite curve. So because interest rates are zero, in some places negative. So you have these two competing worlds that we live in. We live in one world, which is a world made out of worthless debt that's being serviced by the central banks and rolled over every single day, even though the collateral value of that debt, if you were to mark to market that debt, would be absolutely zero. the Federal Reserve's balance sheet wouldn't have anybody buying what's on their balance sheet. They've bought all the junk from Wall Street for 20 or 30 years. It has no resale value, but they carry it on the books as 100 cents on the dollar, right? And it has to be rolled over every day. There's debt to be rolled over. So they keep printing to roll over that debt. So their balance sheet expands into the trillions, the many trillions. On the same token, people are now experiencing real price inflation for food and energy and things like that in the real world. And so you've got a conversation happening on in the mainstream financial media and these policymakers who are saying that they don't believe your eyes. The cost of food at the grocery store is not going up. The purchasing power of your dollar is not decreasing. In fact, there's deflationary crisis that means we have to keep printing. So it's different than the stagflation of the 70s, because during the 70s, what caused the inflation was a wage price spiral up. You know, we don't have that. Wages aren't. I mean, they're slightly going up, but nowhere near keeping up with inflation at this point. And there wasn't this amount of debt either. And there wasn't the ability to create this amount of debt, you know, because post 1970s, starting with the 1980s and Reagan and Thatcher and continuing for a few decades, it was the period of deregulation. So banks were never able to create or carry this much debt. And the global debt to GDP is now like 300%. You know, the global GDP is something like $100 trillion, and the global debt is over $300 trillion. And that's all made possible through the creation of the derivative products that came about during the Reagan-Thatcher years and the era of deregulation. So that didn't happen in the 70s either. So we have this, you know, bifurcated world, this strange world in which people who print money claim that there's a deflation problem, and the people who live in the real world are suffering from inflation. And these two don't talk to each other. So, you know, there's that, what comes to mind is that commercial on TV where that action star is standing between two trucks, you know, and the trucks separate, and he does a big split. Jean-Claude Van Damme, right? And he does the split between these two trucks, you know, and the trucks keep going wider apart. You know, but we're not all Jean-Claude Van Damme. So, you know, most people are going to fall in between the trucks and get crushed. And that's the problem. And then they're not doing anything about it on either side.
Yeah. So okay, we know the economy is in trouble. There's going to be some fireworks here, maybe soon, maybe a little later. But are you seeing is there going to be, does the problem is that like real estate and stocks and Bitcoin and everything just goes up to infinity against the dollar? Or is there, between now and then, this big shock where real estate comes down 30%, stock market down 30% plus, probably in that same environment, Bitcoin comes down 30, 40, 50%. Do we have that shock, do you think?
We will, but it won't last for any length of time, because it'll be met with a wall of money.
Yeah.
So anytime the stock market today is down even 3 or 4%, you see suddenly there's a new credit facility or new money coming into the system. And so this has been a rolling bailout now for decades. And we do have the occasional crash, and it's met with more money printing. You know, 2008 was a great example. I mean, it was scary because there were all these meetings on the weekends. Bankers called in to their offices on the weekends, and you had all the usual characters like Larry Summers and Alan Greenspan and Ben Bernanke, and these folks were all Tim Geithner meeting at the New York Fed, because the New York Fed is kind of the nexus of all this. And so they rewrote laws, they broke laws, they passed new laws, and they made it possible for a fresh multi-trillion dollars of fiat money to enter the system to bail out their friends. And this, for decades, Max, has been masked because of China being kind of an inflation sink, right? Because China, the wages in China are what we call slave wages for so long that even though purchasing power of the dollar was collapsing, the average person was still paying less for stuff like TVs, clothes, things made in Asia. Meanwhile, the stuff that it's not made in Asia, like healthcare, education, and housing, we're all up like 500% in the last decade. But of course, the government doesn't include those in their CPI index. They don't look at those. They say don't believe that. That doesn't exist. Only look at the price of your clothes and your computers going down. That's what we count. That's inflation. And so that was a way to mask the reality of it. But now in 2021, it's impossible to mask the fact that across the board, prices are going up and people are noticing it and they are reacting to it. And they're reacting to it as you would expect anybody to react to having their currency devalued and the quality of life decline.
Yeah. Yeah. No, I think my thoughts are very similar. I've come to, my opinion is, I mean, in 2008, I don't think they were, right now, as everyone knows, their fingers on the print button, they're going to print quickly, their reflexes are strong, they're going to create fast. 2008, arguably they're a little bit slow, but it was the first time they'd ever done anything like on that scale, and maybe it was a little bit scary. They had to talk about it a little while. Okay, but eventually they got caught out. Some Icelandic stock exchange suffers, and all of a sudden there's this cascading effect across the entire world. I'm thoroughly convinced that there is going to be some macro shock, but like you, I think it's going to be very, very short-lived because that print button will get hit very, very fast. And on the other side of that event, where I think Bitcoin gets smashed, real estate gets smashed, stock market gets smashed, I think Bitcoin lead us out of that as a stronger performer and also the fastest performer after that crash. Is that one of the reasons that makes Bitcoin such a good investment for you?
Yeah, definitely. I think in a lot of ways, another way to look at it, Max, would be that Bitcoin is a leading indicator. And the price move we've seen, 50, 60% correction we've seen recently could have been discounting the crash coming up. Markets are forward looking and discounting future events. And it may have already discounted this crash coming up. And so when it actually happens, you see Bitcoin start making a rip to the upside.
Yeah.
Because it'll start to reflect what's on the other side of this, which is a mass panic buying of assets from people looking to preserve wealth in whatever way that they can. I think that gold could be hard to source. The gold market is not that liquid. And if suddenly you've got, there's roughly $100 trillion worth of investment capital looking for a safe haven, less than 1% of it's invested in gold bullion, their first instinct will be to buy gold. And they're going to find it hard to source because there's actually, gold is, there's a squeeze. I mean, it's already kind of hard to find gold in size. So then they're going to turn to Bitcoin. So ironically, gold is going to be part of the Bitcoin story in that you won't be able to buy gold. And people, if you've got a huge wealth and you're watching the fiat money implode and gold's not available, you're going to be buying Bitcoin is really the only available option. Plus, there's already 150 million people using Bitcoin right now, and we've hit that hockey stick moment, that .com mania 1997, where suddenly you go from 150 million users, where we were on the .com era in 1997. That's where we were, and then suddenly went up to 2-3 billion. So I think we're similarly with Bitcoin. What's happening in El Salvador and the region of Latin America is really, the adoption rate is amazing. Strike app is signing up 20,000 people a day in El Salvador. That would imply the entire country is on strike within a year, right? So that's amazing. So all these factors come together. So yeah, I think the where I would differ from your point of view is I think we've already hit that bottom.
That's a very good point. And I raised that just in a video just a couple of days ago on my channel. It was interesting. In 2020, it was late February, the world markets kind of suffered. Bitcoin was a lagging indicator there. We got until early March, got about a 1 or 2 week delay before Bitcoin really dropped down by its good chunk, by 50%. And I thought, when this time around, I thought it could absolutely be a leading indicator. Bitcoin's had its 50% fall, the cryptocurrency market, 70, 80% total with the altcoins. And I think it could well be a leading indicator this time instead of a lagging indicator. And so I think your point has merit for sure. I want to jive, if I could, to innovation in the cryptocurrency space, and specifically the Bitcoin DeFi space. Is there any particular kind of innovation that's happening in the world of Bitcoin that you're particularly excited about coming up over the next 2-3 years?
Well, I listened to the call today with Jack Dorsey and Elon and Kathy Wood. Before the presentation, there was a number of presentations from folks, and that was really fantastic. The debate between those folks was less great, but and one of the presentations was on Bitcoin and what's happening in Bitcoin. And they talked about Bitcoin scaling in terms of how you scale Bitcoin is a layered approach. We've got the layer 2 approach with a Lightning, which is happening right now. You've got, which is very exciting. All the innovation that is coming to Bitcoin is happening on a layered approach. It's happening on that second layer. So a lot of these other projects that have been critical of Bitcoin for years because they felt that it was maybe, quote, too slow, or 3, not able to scale, etc. Those are all being answered now. So and it's riding on top of the Bitcoin, which is, the pristine asset, the uncorruptible, perfect money. So I think that's where people want to be. That's where they want to innovate. That's where it's all happening. Everything else, the way I look at it, Max, is basically, I just separate between decentralized and centralized. Bitcoin started decentralized and it becomes more decentralized. Every single other project out there starts centralized and becomes more centralized. Ether's a good example of this. It started off centralized, and over time it's becoming more centralized. They're even moving to a proof of stake, which is just like fiat money. There's no difference at this point between Ethereum and fiat money. There's no accounting. We don't know how many there are. You can't run your own server, right? So it's becoming very centralized. And that's true with every single one of these other projects to some degree. The centralization can come in different shapes and sizes. And so that's the way I see it. Only Bitcoin is actually becoming more decentralized. We see that in the mining space, all that mining moving out of China, going all over the world. We see that with Taproot, which is innovation that's been brought to the base layer, and it's making the protocol more decentralized. And so that's my focus, and I have no reason why to vary from that. I mean, the compounded annual returns have been spectacular, and I don't have no reason to think that they're not going to continue to be spectacular. So why would I take the additional risk?
Yeah, there's certainly a case to be made that all the innovation and experimentation that is happening out in the altcoin space, it eventually comes back to the Bitcoin space. We cherry pick the best stuff and implement it as a layer 2 solution to Bitcoin. And we're seeing that with projects like Sovereign and Thorchain and other things like that. And it's bringing the DeFi world to Bitcoin. And it could be that the history writes the altcoin space as the Bitcoin testnet, where everything was tested, and then when it was brought, all the best parts are brought across to Bitcoin. So that's pretty exciting. So tell me, where's the rest
in the case of Thorchain, just briefly, it was billed as being decentralized, and then they had a problem and they paused the network. So that's the opposite of decentralized. That's centralized, right? So I don't mind people are experimenting with stuff, but they should be clear about their limitations and characterize what they're doing in a way that doesn't make it sound like they're competing with Bitcoin, or that they're not centralized, right? If they're saying we're in fact not centralized, as you hear from other projects, that's a false statement, right? So I don't mind innovation and experimentation, but I think it should be delineated, should be made clear from up front that there's centralization, it's a corporation, there's a single point of failure, and all the other disclosures that I think should be made. And then, okay, you can have all the fun you want writing software. That's not. I think 80% of all software ever written is never used or just discarded and thrown into the garbage. I know my own experience. I've wasted lots of money on software development for projects for the last 30 years. Okay, great. Anyone can waste money on a software project, but don't mislabel it and say that it's in some way decentralized, similar to Bitcoin, because it's not.
Very good point. Very good point. Tell me, so what's the timeline for this tour that you're on? Where are you headed, and what are you looking to get out of it?
Right. So the Fuck Elon tour started in Austin and a few weeks ago, and it was a smashing success. We had lots of people come, and it's like a meetup, but with a party. We say it's all party, no conference. So it's a way for it to be more celebratory and for Bitcoiners to take a bit of a victory lap at this point, because, after 10 years, 11 years in this business, we've beat off all, or, that's not a great phrase, but we've beaten, I would say, all challenges to the protocol, and it's now legal tender in El Salvador, soon to be other countries. So this is like our victory lap. And, a lot of the tensions and the fights and the wars that went on during the fork wars and the block size wars and all these things, people have survived all of this, and now it's time to celebrate. So we got one coming up on August 19th in Phoenix, Arizona. And details of that, you can find them easily on my Twitter handle at Max Keiser. And we're featuring local people in Phoenix, local businesses, Bitcoin businesses like Fold, which is, to get the sats back on your purchases there in Phoenix.
Mm-hmm.
And some other big names are in Phoenix. So they're all coming to this. Bitcoin Magazine is going to stream it. So they're the media sponsor. And so we'll do this event on August 19th. Tickets are still available. Then we have an event in Paris in September. And so right now, the idea is to do one a month. And we're just doing it, month by month. We have a pretty good sense of how to organize these things pretty quickly, using apps. And it's pretty easy to find a venue, set it up, sell tickets, book flights. I can do it. I've been doing this entire thing from my phone, basically, setting up this tour, which is incredible, So we just do it month by month. And today, with Elon's performance on this B word call, was so atrocious. Somebody mentioned on Twitter, like, this seems like a promo for the Fuck Elon tour. It's so bad. He sounds so ill prepared and so amateurish on this call. No wonder people are saying fuck Elon. Right. So it's just, we got more tickets sold. He's like our unofficial salesman for the tickets to these events. You're invited, by the way.
I love it. I love it. Good stuff. Awesome. Max, final question. You probably know what it is. It's the final question on so many interviews that you do. Any updates to your price prediction for the end of the year?
No, I haven't changed. I think, look, hash rate took a nosedive because of the China migration, but hash rate's bottomed out. So hash rate's building up again. And it's going to start to build up pretty rapidly, pretty quickly. The background to Bitcoin is still very much in play. What you could call the fundamentals valuation is still very much with us. Money printing gone crazy, geopolitical tensions, the absence of a store of value, because gold is very problematic for a lot of reasons. And, remember, Bitcoin is like gold meets a messaging app. Gold meets the internet. So, the network effects kick in, and it's exponential. So you go from 150 million users to 300, 400, 500 million users pretty quickly. And then it's just this voracious, insatiable beast that, my thought about the energy use is that Bitcoin is going to basically use all the energy. And we want it to use all the energy because we want it to decarbonize things like the Pentagon, decarbonize the central banks, decarbonize fiat money. That's what it's an animal that is a predator that's decarbonizing all these legacy systems and institutions that need to be wiped out. And that does it simply by decapitalization, not decapitation like they did in the French Revolution, but this is decapitalization. So we're just going to kill the Federal Reserve Bank nobody's going to give them a penny anymore. It's just, and they shouldn't. They should just buy Bitcoin.
Good stuff. Max, thank you so much for taking the time. I really appreciate it. Hopefully we get to speak again soon.
Excellent. Nice to talk to you, Max.
Well, I really hope you enjoyed that interview with Max Keiser. Is an absolute Bitcoin OG, been around from the very, very early days, and it was a pleasure to have him on. I've been thinking about doing a lot more interviews on this channel, so let me know in the comments below, who's your favorite Bitcoiner? Who would you love for me to interview next? Go ahead and leave me that comment right now. And please go ahead, smash up that like button for Max and hit that subscribe button for me. I greatly appreciate it, and I'll see you soon.